Hello, everyone, and welcome back to the Velocity channel where we teach the velocity banking method in a way you can understand. All right, listen, we are going to go into astronomical interest rates. All right, astronomical interest rates, and these interest rates are real life. I actually have paperwork, documents, right, upon documents on how these interest rates loan sharks, how the others, they absolutely charge these astronomical interest rates, but how you don't need to worry about the interest rate because you're utilizing the velocity banking method. Oh man, and I'm telling you, it's going to be astronomical. But before we go into that, like, share, and subscribe all over the world because people all over the world need to know about the velocity banking method to improve everyone's economy. Now, let's go ahead and go into a scenario that I know you're not going to believe, okay, but it does happen. Can anybody say it happens in the comments? Absolutely, it does happen. And now, I'm sure somebody said, "Wait a minute, that looks like a payday loan, right?" Hey, it can be any loan, right? Any loan that's legal, right? It depends on the state, okay? 109% per year, okay? Yeah. So that's what? That's over 8. That's over 8% a month, right? Over about 9% per month. And that's how you got to look at it, all right? Because if you're getting $2,500, and let's just put that over here, if you're getting $2,500 at 109%, what is that? Who cares, CJ? I'm not going to pay it, right? But you also have to realize that this 109% is per year. Okay, I'm going to show you what that looks like. That's right, $2,725 if you got charged 109%. Now listen, I understand some of these financial shysters will do math that is so legal and is so incredible that you're like, wait a minute, how did it get to be that much? Well, you didn't include the taxes, you didn't include the air, you didn't include, whatever they are doing to add their numbers, it's going to be around $2,725, all right? Now, this is the good thing about that. That $2,725 only applies if you keep it at $2,500, because remember, the interest feeds off of the what? Principal. If this principal amount goes down, what else goes down? It's a direct relationship. And this is what I mean. If you only kept the $2,500 because you really needed the capital, right, for an investment for 3 months, right? You planned on paying it off in 3 months. How much at 109%, 2,500 and 109%, how much, estimating now, would you actually be spending? How much would this loan cost? What's the true cost of the loan? I'm going to submit this for your consideration, okay? The true cost of the loan was $681.25. Now I know, hey, different lenders do different kind of math, but it'll be around this right here for 3 months, okay? So you got to ask yourself, okay, is this loan, is this $2,500 worth $681.25? And that's when you assess everything around you. Hey, is it? Now, folks, in school, and I'm just going to draw this illustration here. Let's go ahead and put 2,500 here, all right? Now, in school, they taught us something, didn't they? Now, they didn't teach us everything because they didn't teach us the velocity banking method. But in school, they taught us about smaller numbers and bigger numbers. Is that right? And they taught us that this right here When asked the question, which one is less than, which one is greater than, we were taught, am I wrong? To do this. That $681.25 is less than $2,500. Now, the only reason why I know that this is a less than sign is because this is in the shape of an L. Thank you very much. Those crocodile mouths that the teachers would say, it didn't help me at all. Okay? But that L did. All right? But when you look at this and you say, well, wait a minute, I need the $2,500 now and I don't necessarily have it. It's locked up in whole life or permanent insurance. It's locked up in an investment here and I have to wait. You know what? Let me go down to a payday loan. Let me go down to here and I'm just going to go ahead and get out the $2,500 for an investment that I need right now. Guess what? $681.25 is less than $2,500. So some may say, hey, man, it's worth it to me because now I know how to do velocity banking. Now I know how to pay it off. I have a plan to pay it off. And some may say, woo, $681.25. Goodness, that's a lot of money, right? It all depends on what your scenario is. If the $2,500, if you're just going to spend that willy-nilly, then absolutely, please don't get that loan. But if you're going to spend it or invest it into something that's going to make you even more, right? Like us, we have the velocity banking tool that people don't have to calculate out anything. They just plug and play and they're saving $80, $100, $120,000 each year. To them, it's worth it, right? To us, it's worth it. And so just to give you a little bit of, see, 109%, is it that bad? Is it that bad? See, we were taught that this number is, we were taught to be afraid of it, right? But we were taught to be afraid of a lot of things, weren't we? And come to find out, my goodness, man, all we had to do was learn a little bit more. And we didn't have to be afraid of the credit card. We didn't have to rip up our credit cards. We just needed to know how to use them. Because you know what? You've got a brain. And with this brain, you know that $681.25 is less than $2,500. And if you need the $2,500 now, and business favors speed, it favors determination, it favors consistency and persistency, okay? Then you'll know, hey, you know what? The $681.25 is nothing. I'm getting the $2,500 so that I can get even more, okay? And build on that, and build on that. And if you don't know how to do that, just let us know. All right, folks, thank you so much for tuning in. There's no need to be afraid of the big bad wolf because we know how to eliminate it. All right, that loan is gone. God bless y'all, and you take care.